Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Well, Jerry's been another one of those weeks with a lot of movement and volatility in the market.
Tom, you have been the topic of conversation this week around our house. I mean, the gold plunged $77 on Wednesday, biggest one-day drop since September, mainly from Bernankes opening his mouth and saying, I guess he kind of put a big needle in the balloon for the party and said, I don't know if we're going to be printing any more money. We both know that's not true, at least for right now. Maybe he's not. What did you make of the Wednesday testimony before Congress from Bernankes and all the things that happened this week?
Well, I think you just narrowed it down. It's not what Bernankes said, it's what he didn't say. The definition of quantitative 1 and 2 was that we were near a recession and the wheels were coming off the economy and the Fed couldn't print money fast enough on their own, so they went out and gave money to public corporations and banks, and that helps move, the velocity of money, and it makes the economy move forward. What Bernankes was saying on Wednesday is, we're not going to do that yet. What he didn't tell you was, we've just finished the highest 3-week growth in the money supply in American history. They're printing money, the Fed is, and the Fed is still monetizing securities that are not sold at the auction, and we are now the second biggest buyer of our own debt. But he didn't tell you that, which is inflationary or more. The public, unfortunately, doesn't understand it, and they hear no QE3, and their immediate thought is, oh my gosh, more people are going to lose jobs. It's going to go back and look like 2008. Industrial demand for silver is going to go down, and it scares people I talk to all week. But once you read between the lines and understand what he really said was, we're not going to give the banks money and public corporations. We're just going to print it ourselves, and we're going to buy our own debt, and that's going to continue. And then when Ron Paul told him he was lying to the American public, I meant to sit in public and call the head of the Federal Reserve, one of the most powerful men in the world, a liar, and use the word lie. When he did it, it was kind of mind-boggling to me, but that shows you kind of guts Ron Paul has when we get to this monetary problem. So that was the key to it, Jerry, is just understanding what he really said and the unsuspecting public not knowing what he meant when he made his statements about QE3.
All right, so you got Japan printing money, you got England printing money, you got Europe, Mario Draghi, he's printing up money, Bernankes printing money, and now we're told that gold and silver are probably going to go down.
Yeah, I think it's already gone down. I've sent out to our email distribution list here on Friday afternoon. They've got now filled the top timer in the world for 30 years, came out of retirement for 1 year to help people through this maze, and he says maybe 1685 early next week, but then he's still got a target of 4350 in the next couple of years, and I think it'll double in the next 2-3 years, and there'll be volatility, no question about it. It's just important that people realize that the paper money thing is just going away, and it's really funny, Jerry, this week when I started getting phone calls on the 29th of February, the last day of the month, when Bernankes made his speech, and in my own email blast yesterday that I wrote, I said it's bad when people are complaining about gold going up 9% in 2 months. That's after the drop, and silver up 24% this year in 2 months after the drop. I don't know what people expect out there. How in the world do you expect something to go up 12% a month forever? That's just not the way markets work. They have to get oversold and overbought, and you have to have adjustments to make fresh money come in, and that's the reason we like volatility in this market, because it builds a stronger base. Every time we get a big drop, more people come in. Every year in this 12-year bull market, we've had a drop of over 8% in every one of those years, and this year is no different.
Well, it's the same thing we've been saying over and over, is every single time you see the market get punched in the gut, it's just a good buying opportunity. You can't see the European Central Bank printing money out of thin air and all these other banks printing money out of thin air and not eventually see the correlation in the prices of metals. Now, there was a report put out by the World Gold Council showing that global gold demand exceeded more than $200 billion last year for the very first time. It also is talking about, which we've been talking about for some time, how China is more than likely going to overtake India for the whole year. I mean, they beat them for the quarter. I think the last quarter they beat India. But it looks like they're going to actually kind of come in possibly this year for the first time in history, or for the first time in modern history, to outpace India in gold demand. Now, how concerned are you? Because there are reports about China, and they're a big question mark in the economic world. How much of an impact would they have if they come to an absolute halt? Are you concerned about that with the price of gold?
I'm not, because if they came to a complete halt, then they would get on the train to printing money. They're not going to sit there and let the rest of the world monetize their debt, and they're not going to sit there and take it. They're a very aggressive country. Their plan is to keep growing and expanding, 9% plus. If it's down to 6% growth, a rate that we can't even comprehend. In this country, they're going to do whatever they need to do. They don't want to do it the way we're doing it or the way Europe's having to do it, but they would do it if they had to. Now, certainly, when you've got that many people and the growing pains they're having, but to us, the way they're spending money is just going to keep inflating. We'll have everybody printing money until eventually we go to a gold standard at some point in the future. Silver, right now, it's just, my suppliers they're growing in number, tell me about the shortage of physical silver. They're just not going to sell silver if they don't have it in the pipeline. They're not going to take orders if they don't have it. And because I've got 3 different ones telling me that aren't related in any way, I think we could see some serious strains later in the year. And I had one of your listeners, Jerry, email me directly. I wanted to answer this question. They said they'd seen where palladium was not as dependent on Russia as it has been, and that the mines in South Africa that once were easy mines to get palladium, and now they're a little tougher, they're harder, a little deeper, a little more costly to get the palladium. Last year actually came up to about a third of the world's supply came out of South Africa for 2011, and we actually see figures where people think that this year could be about 55% out of Russia and about 40% out of South Africa and about 5% out of the U.S. and Canada and other places. And really, that does not hurt what we're doing with palladium. It would stabilize it most of the year. We would not have as much volatility. And, of course, that's also helped by the PALL ETF. So it's not a major concern, but I did want to answer that question because it's a great question, and it's really good because it is spreading out the supply of palladium, across 2 countries instead of just where we've been leaning heavily on Russia for several years. All
right. Well, why don't you tell the folks how they can get a hold of you if they want to have a question or they want to buy gold or silver?
Yeah. Well, 2 things. If you want to talk to me about pricing or getting that, just give me a call at 800-247-2812. That's 800-247-2812. Or just go to FTM Daily and hit the Precious Metals button if you want to get on my email blast, keeping you updated on economic events as well as specials and buy-sell signals on the metals. And once again, if you're not on that email blast, it's a very important thing to be on because it'll help you separate the wheat and chaff from the real market conditions. And once again, you just go to FTM Daily and hit the Precious Metals button and put your name on there, and we'll get you on the email blast, and we keep your email completely confidential. We don't sell it or show it to anyone.
All right, 800-247-2812 if you want to talk to Tom. Tom, have a great weekend. I'll talk to you next week.
Jerry, thanks. Great being with you.